Welcome to TheoTrade. This is Don Kaufman, April 15th, 2020, just seconds after the closing bell with the S&Ps down about 2.5%. Is that the end of the rally? Let's get to work, look at a couple of sectors, explore volatility, and all of a sudden, the bonds today popped back into action. Let's get started right now on the S&P futures. You know, on a day-to-day basis, the S&P futures, and I've reiterated this time and time again, we're getting action with the S&P futures where we're literally just pinging back and forth between these gravity points. Now, this happens to be a 30-day, 1 hour. And what is rather unique about this particular trading session, and if I zoom in here, and again, this is on an hourly, I zoom in here, kind of stuck right now between a rock and a hard place. And I got to tell you, this is one that we have not seen very often. Almost undoubtedly, each closing session, you know, we've either closed at the above gravity point or a lower gravity point, regardless, again, of the recent trading sessions. We've pretty much been hugging one of these gravity points. And the reason I kind of bring that up is in the after hours trade, clearly we've seen a lot of movement in after hours trade. You got to kind of ask, you know, we're going to head for one of these gravity points. Now, down below over here, we have the, that's the 27, okay, 31. Back up above here is 28.11. So stick a fork at us because we are right smack in the middle. I assume in the after hours trade that we're going to make a more substantial move. And my assumption here is that that move should be back towards 27.31. Now, I don't make that assumption lightly. Okay, what am I basing, okay, that particular assumption on? It's the bonds. Okay, the bonds all of a sudden today sprung back to life. And I've been talking about this, okay, just incessantly. The bonds have been incapable of anything. They can't even get out of their own way in recent trade. And of course, we attribute that to the efforts of the Fed. What has the Fed done? Oh, basically eliminated the bond market by putting a giant backstop behind it and trillions of dollars. It kind of staved off a lot of traders. Listen, nobody necessarily wants to trade a marketplace that's being influenced by the Fed, right? So the volume in those bond markets has just been completely dead. Today, oh, there's a sign of life. But more importantly, they moved. The bonds moved today by the tune, okay, of almost 3 full points if you're unfamiliar with bonds. Okay, they still trade in ticks, which is fractions. There's 32 ticks to a 1-point move. Seeing a 2 and 29 tick move, that's a big boy move inside of the bond market. And it kind of, again, begs that question. Maybe they're back to life. We'll have to take a look and see if there's actual follow through to this. But as the bonds are going up, obviously it's taking the interest rates down. Which brings me to my next few points over here. So the big question, of course, in this marketplace, is that all she wrote for the rally? I mean, all right, let's go back to the S&Ps for just a second. In this particular case, we'll actually cruise over to the spiders, right? Is that all she wrote for the rally? So here we are, effectively what we're now calling at least the short-term bottom here. In last week of March, we've had 3 weeks effectively to the upside. Today, yeah, let's quantify this. It's over a 2% down day inside of the S&Ps. It's a fairly significant day. We didn't close at the bottoms. Nevertheless, you have to actually ask that again. Is the beginning of the end? Well, there's some good things and some bad things going on inside of the marketplace right now. And that question about is the rally over? Okay. All right. First, I would have to assess a little bit about, okay, the advanced decline line. Are we seeing correlation? This is something that I actually discussed in Monday night's video, and I was even talking about it on the weekend a little bit, weekend video. Nevertheless, this is the S&P 100, and we're near full-blown correlation. This is not what we call that quintessential full-court press, okay? But effectively, when we say that, you know, there's 88 or, for instance, 90, you know, decliners in the S&P, okay, what that is in effect doing, okay, it means that the S&P futures are fully in charge. That, you know, individual stocks don't matter nearly as much. Now, obviously, Amazon was kind of the odd stock out. That thing closed up again, another 1%. It's an all-time high in Amazon, and it kind of begs the question, what do people know about Amazon? Or they're just caught in a short squeeze in there. Nevertheless, okay, we're into a correlated state right now. When we're in a correlated state, individual stocks matter a lot less, even though it's earnings season, which is unusual. Individual stocks matter a lot less. What matters right now, okay, is sectors in the overall S&P. So when we start talking about sectors, okay, let's start with the financials. So the financials today had nothing good going for them. Okay, we had Bank of America, we had Goldman Sachs, okay, we had JP Morgan yesterday and Citi, and oh my, I mean, listen, all of the banks are coming out with their earnings. And it's hideous. I mean, what did you expect? The one thing that's kind of shocked me, though, about some of the banks, when you start listening to their numbers, they're like, yeah, so the profit's down about 45% in the first quarter. And then something kind of resonated with me. I go, whoa, time out. Your profit's down 45%? Yes. But wait a second. You only got impacted really like the last 2 to 3 weeks of March. And you're still down 45%? Yes. And all of them are setting aside billions of dollars, okay, for what they're going to look at loan defaults. So what happens? Well, I think the street looked into that and said, sell it. And they've done just that. If you take a look at the XLF, it's down another 4%. That's actually look specifically at it. The reason I want to look at the XLF, and in this case, I'm actually going to pull it up on a year-to-date percentage to show you on a year-to-date percentage, it's down about 30%. But more appropriately, I like to look things at least 1 year, okay? I like to look at 1 year. Why 1 year? You got to give yourself a little bit of time to be right. The year to date is kind of abstract, but this is, year over year. So on a 1 year kind of rolling basis, we're down, okay, to the neighborhood of about 20%. Now keep that in mind because we're going to pull up a couple of the different sectors in here. So what's going on? Listen, the financials are just getting annihilated, right? They're down 20%. What other sectors do you want to talk about? You got to look at energy. Energy has just been decimated. Need we even mention it? Okay. So, all right. So you've got the financials, okay, getting hammered upon. You've got energy that's just been decimated. It's down 50% over the last year. What else you got? Okay. Oh, here, let's actually go over to like something like XHB. This is not a big sector, but I figured I'd cover it. XHB, home builders, they're actually down 23%. They're doing worse than the financials in here. What else you got? Okay. Well, then even today, I was looking over at like consumer staples. Consumer staples, quite ironically, is actually up. Notice I have a working order in here. Yeah, I'm actually stepping in and I'm re-shorting. I was short in consumer staples and I'm actually re-upping some of my short positions inside of consumer staples. Okay, but the interesting thing is consumer staples did get hit today, all right? They're down to the tune of about 1.6%, not nearly as much as the S&Ps, but not half bad, okay? So why am I looking at this and why am I taking you through, okay, the financials and then I jumped to the home builders and then I looked at energy a little bit. Why am I jumping sector to sector? Because if we're going to make a leg down, I want to know where to be on that next leg down, okay? I don't want to be short in the financials. They've been decimated. I don't want to be short in energy. Okay, it's almost non-existent being down 50%. You're not going to, squeeze blood out of a turnip over there. So I look at XLP and I'm like, oh, there's some opportunity in that one. But I have to reiterate, okay, and I'll do this again and again. Technology. Take a look at big technology. This is the monsters of tech. It's Facebook, it's Apple, it's Microsoft, it's Google, it's Amazon. Can you believe where it's at right now? It's up 24%. In the last year. This is a year. It's the same year that we just looked at. Okay. So you're like, yeah, but that's kind of heavily influenced by Amazon. By the way, Amazon's up some 25%. How ironic. Okay. Amazon's up 25% year over year. So maybe it's not right just to look at the monsters of tech. So let's look at the QQQ. The QQQ is up 13% year over year. You got to look at this for what it is. Okay. You just heard from Jamie Dimon yesterday. Well, I bring up Jamie Dimon, and again, I'm not a huge fan of JP Morgan or Jamie Dimon, but I got to bring it up. And I'll reiterate this because he's the only surviving CEO. And when I say surviving, I mean individual, okay, in his position. He's the only remaining CEO, okay, that got us through the financial crisis. That's the remaining CEO specifically to the financials. And he yesterday said this is going to be the most devastating recession of his entire career, that this is going to exceed the financial crisis. And at the exact same time, it's okay. Apparently, that crisis is not going to impact the Nasdaq. Okay, the Nasdaq is completely and totally unscathed. At this point, I'm going to reiterate. I reiterated on Monday. I talked about it in the weekend video. It's got to be tech. If this is the end of the rally, it's coming to tech. It's coming to a theater near you. I actually re-upped a short in Microsoft, and I'm going to tell you guys right now. Okay, I re-upped a short in Microsoft, and I'm underwater a little bit on it. Okay, I am taking a little bit of a loss in here, nothing major, but I must strongly state to you this. Okay, if you're going to step in and you're going to short Microsoft, and I'm using a synthetic short position, and many of you know how to do that because you've learned it here at TheoTrade. Okay, I'm going to have to probably take some short-term pain. But this one, again, the year-to-date percentage is up 7%. Okay, when you start to look year over year, it's still up. Again, almost 42% year over year. This is where I wanted to start creating short positions. I think they're the most opportunistic from a risk-reward standpoint. So again, you've heard me say it a few times, but we've come to the point. If those S&Ps are going to continue down, okay, they went down today, but you got lucky that they went down. What do you mean lucky? Okay, come on, the financials had earnings. Okay, it's kicking something that's already down. It's hideous out there. If the S&Ps are to make a true leg to the downside, that is, if we actually reverse the S&Ps and we start to see some real sell-side activity in the S&Ps, taking us down to like 250 again, it's got to be tech. And tech would have to play catch-up, okay, to what you're seeing inside of the financials. Tech has to play catch-up to what you're seeing in energy. It's not just going to be a sell-off if it happens in tech. It's going to be downright hideous, and that's the point that needs to be made. And yes, tech does have earnings kicking off next week. All right, we've heard from the banks, it was ugly. We heard from a couple of individual companies, it's ugly across the board. Well, we're going to have to wait and hear from tech. I don't think so. I think we actually may see some sell-side activity prior to that. One last thing to denote, okay, happens to be the weekly expected move. Quite ironic here. We are sitting directly where we started the week. We're not up on the week. We're not down on the week. Okay, plenty of room for movement. I just want to kind of detail the high and low of this expected move. To the upside, you're looking at about 29.24. To the downside here, you're looking right around 26.50. So get ready to rock on Thursday and Friday. This marketplace, it is gonna move. Get ready for it. With that, I want to thank everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.